Welcome to the presentation of PALFINGER AG's Q1 to Q3 2022 results. My name is Felix Strohbichler. I'm the CFO of PALFINGER AG. Let me start with a quick glance at PALFINGER at one slide. We are the number one in crane and lifting solutions with a revenue of about 1.84 billion euros in 2021. We are represented in all regions worldwide with 31 production sites. And a very important USP of PALFINGER is that we are covered in over 130 countries worldwide with around 5,000 service partners offering the best service coverage in our industry, employing around 12,100 employees in the year 2022. If you look at the regional split on the right side of the chart, you can see that EMEA, with around 60% of turnover, is still by far the largest region for PALFINGER. However, North America with 25% is increasing, and we are getting close to our target of reaching about 1/3 of our turnover in Americas. On this slide, you can see our product portfolio as well as the customer segments we are serving. The most important customer segment is the construction industry. Also very important is forestry, waste management and recycling, but also a lot of other sectors like infrastructure, offshore wind, oil and gas, fish farming are very important parts of our business. Sustainability is a very important factor also for PALFINGER, and we have implemented a sustainability council consisting of senior managers of the core functions to make sure that sustainability strategy on the one hand and business strategy on the other hand are one strategy and not existing one next to each others, with the clear targets to reduce emissions, to foster health and safety, and of course transparency and governance are very important values for PALFINGER. You can see some headlines for the year to date, Q3. First of all, we still have a very high order backlog. Of course, the uncertainty has increased, especially in EMEA, which is affecting demand in the meantime. And what is also very clear that the supply chain is still unstable. Even if we see some improvements, this is still a major factor. So going more into detail on those topics, first of all, the market environment in North America and Latin America is still very positive. So we don't see here major signs of a recession. However, in EMEA and APAC, we have here a weaker market demand due to the global economic developments and uncertainties. And in APAC, of course, also due to the Chinese development with lockdowns, etc. Then if you look at the revenue growth of PALFINGER, this is also influenced not only by price increases, but also by exchange rate effects. The strong US dollar and the ruble clearly also impacted here the revenue. I already mentioned the high order backlog. This also means that we still have long delivery times, but still acceptable to our customers. And what is also a major factor is the high inventory levels we are faced, especially for finished goods and also for trucks, due to the fact that deliveries for trucks are still very unstable. We face a lot of delays. Sometimes trucks come earlier, and this simply is a major impact on our balance sheet and our inventory levels. And what is also important to mention is that we have introduced at the half year 2022 dynamic pricing, which means that the next price increase taking effect from the 1st of January onwards 2023 will be linked to an index. And if this index shows a higher cost increase than the price increase we have communicated to our customers, we can pass on those additional cost increases. And this will help us to stabilize the profitability and to pass on cost increases much quicker than in the past. If we go from the segment sales and service to the segment operations, we still can show a very good output level despite of the fact that we are facing quite substantial material and personnel bottlenecks like many industries. We also have seen a very good revenue and profitability level in our production for third parties, and also in the segment operations, we are facing very high inventory levels due to delays, especially in the delivery of electronic components, but not only. And we have also set up a task force on the one hand to reduce energy consumption as a whole, but also to replace gas as much as possible. If you now come to the KPIs, first of all, the P&L of the group, you can see an increase of revenue of around 18% to 1.58 billion in the first 3 quarters. As I said, this revenue increase has been boosted also by FX effects and by massive price increases we had to implement in order to compensate for the cost increases of the last quarters. In the EBIT, you can see a reduction of the margin. This is simply due to the fact that our EBIT on the one hand was impacted by cost increases, and in order to compensate for this, we have announced price increases. These price increases were high enough to compensate. However, due to the long-lasting order book, we had a certain deferred effect and a certain time gap in between cost increase and price increase. So we have here a certain dip in profitability, but only for a limited period of time. And this will be fully compensated with beginning of next year. Here you can see that our level of investment is more or less on the same level as Q1 to Q3 2021. However, we are expecting higher levels of investments because we still believe in our 2030 target to reach 3 billion euros of turnover. And this requires a high level of investment, which we will see more and more in the quarters to come. If you look at our balance sheet, mainly on the liability side, you can see here a strong increase in financial liabilities or net debt, simply linked to the huge increase of inventories. We are addressing this with a massive program with the target to reduce our inventories by around 80 million euros until year end, of course, depending also on the stability of the supply chain. The good thing is that we have a very interesting and attractive financing structure, still more than 3 years of remaining term of debt and an interest rate of less than 2% at the moment. Of course, this is going up, but still this is very attractive compared to what we are experiencing at the moment in the market. Again, if you look at the equity KPI, we have to consider that we recently had 2 transactions which reduced the equity by around 90 million. On the one hand, this was the resolution of the cross shareholding with SANY, which led to the acquisition of 7.5% of PALFINGER shares as treasury shares, and on the other hand, the acquisition of a minority stake in a group company in France. Of course, these 2 transactions also impact here our KPIs as well as the high level of inventories and net debt does. So this is why net debt EBITDA, gearing and equity ratio have been impacted accordingly. On this slide, you see the cash flow development, and obviously, if you look at the third line, the change in working capital, mainly linked, of course, to inventory buildup, has dramatically deteriorated here. The cash flow position coming from almost 100 million in 2020 in the first 3 quarters, now to minus 70 million in the year 2022. But as I already mentioned before, we are working on reducing the inventory levels dramatically by around 80 million until year end in order to improve this KPI. If you look at the year-end outlook for 2022, so we have communicated that we want to reach a revenue of around 2 billion. In the meantime, with the good order book in our hand, if nothing major happens in Ukraine, we expect that the 2 billion are quite secured. So we expect here clearly to reach more than 2 billion of revenue in 2022, and also the EBIT should be close to the previous record year 2021. As I mentioned, we will see further price increases taking effect starting from January, especially also with the dynamic pricing, which will stabilize our profitability. Still, we have to consider that we have a very challenging environment. The geopolitical situation is still unclear, and the macroeconomic development doesn't look that good. However, PALFINGER is very well set up with many customer segments, with many industries we are serving. So also based on a good order book, we are positive also for the quarters to come. And last but not least, of course, energy supply, unstable supply chain, COVID remain certain factors of uncertainty. Thank you very much for your attention. All the best, and looking forward to keep in touch.